Welcome, everybody, to today's episode of the Financial MD Show. We're so excited to be back. Dr. Trevor Smith is off starting his own practice, and I'm sure he'll jump back on and fill us in there. But today we've got a special guest / co-host, my good buddy, Cory Lee, a well-established CPA tax expert in the area, is joining us today. And I'm super excited. We've got a long history going back that I'm sure we'll dig into a little bit and do some nostalgia recall. But
yeah,
Cory, it's so good to have you today.
Yeah, I'm happy to be here. Thanks for having me.
Yeah. So guys, I'll tell you a little bit about Cory from my perspective. I think, Cory, you and I were introduced by, I can't believe I'm remembering this now. I bet it was 2015 or 16. And I think I remember who it is for confidentiality's sake, but it was an ER physician and his wife who was just getting out of residency, pretty sure. And Cory was a friendly guy that was really great at helping this couple. And we met through just in the financial planning world, at least at FinancialMD, we try to get to know our clients' other professionals and establish a good working relationship to try to coordinate the whole comprehensive picture. And so along that way, I met Cory, and I was just 2 or 3 years in the profession and learning a lot. And Cory and I have done a ton of stuff together in the last 6-7 years. Yeah. And Cory has been probably the CPA to whom I've sent the majority of my clients by far. And even before then, Cory was working a lot with physicians, and probably now a little bit more thanks to us over the last 6-7 years. As you guys know, there's a unique financial situation that young physicians are in, and residents and those just starting out and attending, that you want to work with somebody that you know and you like and you trust, and they know your situation. So that's where Cory comes in here, and we'll talk about some of the things we've done together and what Cory's been up to. But yeah, Cory, tell us about where you came from and what brought you to what you're doing today.
Well, like you said, I work a lot with physicians. Probably 70% of my business is with physicians. So I do a lot of tax planning, tax consulting, set up practice type help, exit strategy planning type help. I also do business valuation. So, if people are looking to merge or sell or buy a practice, I help with that. I've just really been CPA for, about 25 years now, and just have really enjoyed just helping people out. And, to touch on your point, I think we have a good collaboration because, we have similar philosophies in that we want to help the client. And sometimes that's referring them to other professionals. You have to know your limitations. You have to know what you can do and where you need to be able to refer to somebody else who can help that person out as well.
Yeah, absolutely. Okay, cool. So Cory, where'd you grow up and go to school, and how did you learn how to do what you're doing today?
The short answer is I grew up all over the place. My dad worked as a computer programmer, so we moved around a lot as a kid, but I ended up, functionally growing up in Troy, Michigan. Went to high school there, went to college at Michigan State, got my bachelor's in accounting there, and then went to Walsh, got a master's in finance and MBA there. Okay. And just started working in the Metro Detroit area. And I've, been working here as a CPA ever since.
And an MBA. Okay. See, I didn't know that. Good. I'm learning stuff about you too.
You got the MBA and the master's in finance just to diversify the accounting background, just to be able to help people out. 2 masters.
Brilliant.
And then I've got my CPA as well as my CVA, just to make sure that I could help business owners, make decisions, and just got to be a resource for the clients that I was working with. So
CVA is certified valuation
analyst, right?
Analyst. Okay. Interesting. Very good. So at what point does someone like you know they want to be an accountant?
It was high school, and freshman year of high school, they did a career counseling, the personality profile testing, like career choice kind of testing. And the 2 top ones for me were mortician or accountant.
Excellent.
Those were like the 2 top career choices. And I'm like, not too fond of dead people, so I'll try this accounting thing. And there was an intro to accounting class that I took sophomore year. Okay. Got 104% the first semester, 106% the semester, got every question, every test right, plus all the extra credit that, anytime the teacher asked me a question in class, I knew the answer. It was just something that I knew. It's something that clicked. I could read it once and just know it, So I took more accounting classes sophomore or junior and senior year, and said, hey, I really like this. Let's, Michigan State had a really good accounting school. So I went there and did really well there. So I just got into public accounting and haven't looked back.
Yep.
just really
Okay.
enjoyed it. It's just
Well,
one of
that's,
those things where, when you struggle with science and you struggle with all these different topics and something just clicks and you're really good at it,
mhm.
you stick to it.
Yeah. Yeah. No, that's beautiful. So few people are like that, where it's like, huh, I like it. I'm really good at it.
Yeah.
This makes sense.
Yeah. I just kind of found what I was good at early on and just have
Yeah.
stuck with it and just still enjoy it. And,
Yeah.
I get to work with numbers, which I prefer, numbers over words, and I get to help people. So those are two
Yeah.
things that I really enjoy doing.
Yeah. Very cool. And I think the unique thing that I'll brag about you a little bit on is that you are not the typical accountant in the sense of you have people skills and you know how to talk well. And
Those
uh,
have taken some development. Yeah,
yeah,
I've
yeah,
definitely
sure.
done some Toastmasters. I've done some other things to bring
Okay.
myself out of my shell. I'm
Nice.
I'm an introvert by nature, of course. To being typical of accounting. There's an
Yeah.
accounting stereotype for a reason, but I try and break that mold. I definitely try and be out of my shell and talk to people. And because if you have the information but you're not sharing it, what gives the
Yeah.
information?
Yeah, totally. And that's, yeah, if you have the information, right, it's in, but it's not getting to people, or you can't communicate it well, or whatever the case
Exactly.
might be, that's so
Right.
critical. I mean,
Yeah.
in our field, when I took the CFP a year and a half ago, they had just started introducing the topic of psychology of money and behavioral finance and all that stuff. But that's such a critical key component, especially because so many good financial planners are good at financial numbers and data and planning and figuring out, but just not that great at the people side of things.
You
And
have to know the psychology of people to understand what they
mhm,
like, what they don't like, what their risk tolerance is. I mean, there's a lot of different factors to
that,
kind of
yep.
take into consideration.
Yeah. And what they're saying, I've got a client that is an older client we've been working with for many, many years. And she's very frustrated because she didn't get the kind of growth this year that she wanted to in her accounts. And I said, well, because we had you fairly conservative last year, you were really upset because you had lost so much in these stock investments that you had. So we switched everything to a little more conservative while
Right.
still, getting some growth. She had 12% in the last 9 months she got, but she wasn't happy because the S&P had done whatever. And it was like, well, I didn't think you wanted to be in all stocks. Pretty sure based on our conversations. Well, I don't think that's what we said we wanted. And so it just became this whole
Right.
like, here's what I've been doing this a long time. I understand. You may not have directly said it. Here's what I thought was the best portfolio based on how you felt when
Right.
the account dropped. So my first thought is, we can't let your account go down this much again, you know?
Right.
And so those are the kind of things where it comes into play of like, okay, maybe she couldn't even articulate what she wanted, or
Yeah.
now looking back, she feels anyway, that's a whole,
And it's also goes to some people don't know what they want until they realize they didn't get it, and then they
yes.
complain about it. Right.
Yep.
So you can't always get what you want if you can't express what you need or what you're looking
Yes.
for.
Yes. And that was what she brought to me was, well, my friends all said they got this much this year.
Oh my God.
Their accounts grew this much. And I said,
I'm,
I don't know
I
what
have
to
that
say to that.
I have that same problem every year. I get people who say, "Oh, my friend got a refund. Why do I owe?" Or,
I know.
well, it's a different situation.
Oh my gosh. Yeah. Oh, so yeah, and that's where I definitely make that a priority just unconsciously because of my background. I've got bachelor's in psychology and I've got a master's in counseling.
Mhm.
And I really try to push, I've talked to MSU and their program about making sure they've got a good emphasis on behavioral coaching and finance and just, yeah, financial coaching, because that's a lot of it as well. I've used so much of my counseling training in financial planning just unconsciously. And, marriage counseling as couples come in, money is one of the most contentious things to talk about, one of the most emotionally driven things.
Absolutely.
And you and I both see that in our conversations. And
Yeah, very much so.
but yeah, so getting a client to success is more than just getting them the information.
Absolutely.
How do we get them to take action on this stuff for sure? And
Right.
a lot of that is building a relationship with folks like you and collaborating with that. So
Yeah, because
tell us about the,
even if you
go
give them
ahead.
the most perfect results in your mind, it may not be
Yeah.
what they wanted. So it doesn't. Then they're not happy.
Yeah. Yeah, that's true as well. And you may think, I have an idea what I think this client needs based on their goals and their
Exactly. Yep.
values and plans. I had a couple that had just gone into practice, and I had suggested they not pay off their house for a while because it was low interest rate days.
Mhm.
And they had surplus. I said, do it here, get on track for retirement, 401k, I build all this stuff, the usual things. And I say, this will get you on track for your goals. Yeah, but we'd like to pay off our house early. Okay, we can talk about that. I don't think it's a good idea. Here's why. And eventually I got
You
an
have a
email
3%
from them.
interest rate. You should never pay that off.
Oh
But
yeah, it
that's
was
if
that,
but if
I'm
they have a
sure.
desire to pay it off, they're gonna want to pay it off. So it's
And that's
hard to.
kept, yeah, they ended up moving on because they just didn't feel like I supported their goal of being debt free, which you're right, my fault. And that was a
Right.
learning experience for me. I communicate that to clients now.
Yeah.
I think this is going to get you to your goals in the best way possible.
Right.
But if you want to do this instead or pay off your house early, I can get on board with that and figure out how to help you do that. I just think
Yeah.
it's going to throw away a lot of money, but whatever.
Right. Yeah. You're going to be shortchanging yourself in the long run because you're not investing and using that advantage of that lower interest rate. But,
Yeah,
if you have a high interest rate, then you want to pay off that debt as soon as possible. It all
sure.
depends on the circumstances. So,
And I get good practice with my wife because she wants to pay off our house. And I think my interest rate is 2.875. And I'm like, babe, no, here, and
never paying that off. Never,
no,
ever, ever.
no.
Let
That's
that
right.
sucker ride.
Yeah. So, so after the schooling, there's a test to become a CPA.
Right.
Is there a prerequisite in terms you have to have a certain type of degree, obviously the accounting bachelor's, is that enough?
Yeah. So currently for the CPA exam, you have to have 150 credit hours.
Okay.
So you have to have a bachelor's plus another 30 hours. So a lot of programs have done like a 150-hour combo master's degree.
Gotcha.
Where you can get the 150 hours you need to sit for the CPA exam in a fifth year. So you do the 4 years plus an additional fifth, you get a master's and 150 hours. So then you can sit for the CPA exam.
I see.
Then the CPA exam is a 4-part test currently, and it's really a lot of work.
Yeah.
A lot of studying.
How long does it take as far as the actual test itself?
It's different now. So I think it's broken out into about 4-hour increments right now. So it's 4 parts, 4 hours each.
2 days.
Yeah, basically 2 days of testing.
Okay.
But
back to back, or they have separate?
No, it's all separate now. So you take one part and then wait, 6 to 8 weeks, and then take another part. So you can study for each part in between.
4 separate parts, though, huh?
Right, 4 separate parts.
That's not bad. That makes
all
sense.
different topics.
Gotcha. Yeah, our CFP was 8 hours one day. I think all told, the break in the middle.
Right.
Yeah. Okay. And so work-wise, you got the CPA, and then what was work like after that for you?
So when I started off working, it was just a lot of learning, learning how to do tax returns, learning how to do audits, learning how to do financial statements, learning how to do all the things that, CPA does. Most CPA firms do everything from payroll to, bookkeeping,
Sure.
Financial statement preparation, audits, tax returns. There's just a lot to learn. And then as you progress, and as you get into it, you kind of learn what you like and what you don't like.
Yep.
I've really stayed more in the tax realm. So I don't do any audits anymore. That we have other people in the firm that do that. We have people that do the bookkeeping and the payroll taxes. So I don't have to do that anymore, fortunately. I stick with doing the tax returns and working with clients on how to get their taxes done and maximize their tax efficiency.
Awesome. Yeah, that's good. And so you're working, your office is based out of Ann Arbor?
Correct. Yep.
Okay.
I'm currently working at a firm, Andrews Hooper and Pavlik, that has 9 offices, all in Michigan. I'm in the Ann Arbor office. So it's nice to have resources. There's a lot of small firms out there, single, maybe 2 or 3 partner firms that just don't have the resources because they're limited to what they have. We're also nice because we're not a big national firm. You're not going to get lost in the shuffle. We try and have 9 offices all in Michigan so we can have that, personal contact for people that are nearby. Yeah. Have small local offices to serve the communities that we're in.
9 offices. Okay. Yep. Fantastic. So over the years, our listeners know we like to put out a lot of education, a lot of resources as much as we can. One of the things that probably our listeners don't know is that since 2014, financial that are on the verge of graduating in their final year, fellows that are in their final year, specifically tailored to the decisions that they're going to make as they transition into practice. And it's kind of the capstone on our lecture series. We do lectures for many different residency programs around the Midwest that are focused on 4 topics: cash flow, protection, investing, and debt, of course, is the other one, student loans and such. And so those are done for all of the residents in didactics during grand rounds. But then we do these dinners, and I don't know where the idea first came about. I'd been doing these dinners for a few years, and they were successful, and we started doing them in Lansing. We did some in Detroit, Grand Rapids, Ann Arbor, Kalamazoo, Saginaw. Gosh, how many different cities? Chicago. Did one in Cincinnati a few years ago, and then Indianapolis. So about 10 different cities that we've done them in, and always been really well received, really fun for us to do. And then somewhere Cory and I got the idea we should do these together, like give them a more well-rounded experience of hearing from a financial planner and a CPA. And then we usually bring in a physician loan or a mortgage expert in there as well. And it makes for a great conversation. And you get to, it almost becomes like a panel discussion, which is kind of cool. We've got these 3 experts, and we're sitting there having dinner with residents from all over different hospitals in the area. And they bring their questions, and we've kind of got specific topics we might cover. But Cory and I have been doing these dinners together for a while, and it's just been something we look forward to. They're fun to do. Yeah. And man, every time, I think pretty much every resident leaves, they're just so grateful for the information, for the time. And I know they walk away with stuff that they wouldn't have known otherwise. And they get to ask some fairly personal questions. Obviously, there's questions we'll follow up on and things afterwards. But yeah, Cory, I mean, thoughts on that?
I think I love the dinners. I love the way that it works out, because it's just really a relaxed, casual, like friendly conversation where they get to ask questions and we get to answer questions. And I love answering questions and helping educate people, because, a lot of this information is free on the internet, but you can't make heads or tails of it. It doesn't mean, you can read 20 articles on HSAs and not understand what the heck it's for and how it helps you. It doesn't mean that you can understand how they function, what the benefit is, and how it's going to affect you. And just a variety of questions. I mean, people come with all kinds of questions, but then at that dinner table, because we have so many people there, they not only get to ask their questions and hear the answer, but they get to hear other people's questions that they didn't even know to ask, that then get to hear the answer to.
Totally. Yeah. And how many times did they come in with the question because, hey, I heard this on the internet, or I heard this on Instagram, or I had a attending tell me this, or another resident, or whatever. And that's their opportunity for them to help clarify and stuff. So not that we're super promoting it, but if you hear about one of these dinners near you, definitely try to attend or reach out to us, and we'll
they're definitely beneficial. Definitely.
Yeah. So what have you found, if we can kind of fast track our listeners here today to try to get an inside scoop, like what are some of the questions that we're seeing, Cory, that maybe would be good to point out to some of our listeners that we find, or topics that come up that, hey, we'll give you a sneak peek at the dinners and some of the questions that we tend to find happening most often?
I think the question I get most often is, what is the best tax deduction out there? Right. So how do I, what is the way I can lower my taxes the best, the easiest, the fastest, whatever you may want to call it. Right. So everybody has to pay taxes, but nobody wants to pay more than their fair share. And in my mind, the best tax deduction out there is the HSA. The health savings accounts are, if you have an opportunity through your employer, or, if you're self-employed to start an HSA, if you have a high deductible plan, you can put in, $3,850 if you're single, or $7,750 if you're married in 2023, and just let it grow. It's an investment vehicle, which you get a tax deduction for. If you don't spend it on medical, it's a savings account. So you can just let it grow. You can start investing that generally in mutual funds like a 401k and get market rate returns, and just let it grow until you need it. And everybody's going to need medical expenses at some point. And, with aging
Yes.
population and, all these different factors of life in general,
Hmm.
at some point you're going to need medical expenses. So this is like a way to build a medical slush fund is what I call it, for
Totally.
at some point when you need it. You get a tax deduction when you put the money in, you get tax-free growth, and then as long as you spend it on medical, it comes out tax-free. So it's
Yes.
the best tax benefit out there. But unfortunately, it's limited. So it's something you want to do every year for a long
Hmm.
time to be able to build that up.
Yeah, agreed. No, that's totally true. And that's we're on the same page with that. We call it triple tax free in a sense. It's the
Right.
only thing like that, right? That goes
It's the
in
only thing out there
tax
like that.
free, comes out tax free. And then worst case scenario, if you're over 60, 65, you can take the money out without a penalty. You just got to pay taxes on it. But in that case, then it's
Right.
just like a 401k or like
Exactly.
effectively.
Yep. It's an effectively a secondary retirement account.
Yeah. So it's a no lose situation. And we definitely, and I've even had conversations with many of our, especially high income clients, where we talk about, hey, we try to pick their plan at the beginning of their job and pick their benefits. And I'll kind of lean towards those HSA plans.
Right.
Because that's something to note too. Not every plan, not every health insurance plan qualifies to have an HSA. It's got to be a high deductible health plan.
Right.
And that number of what makes it a high deductible changes every year. But look for a plan that has an HSA that's a high deductible if you want to have that tax advantaged account.
Right.
And you briefly mentioned this, but that's the other piece, is that they can be invested inside most of them. So a lot of times you get to pick your own provider, whether it's Fidelity or Health Equity or WEX or whatever, Optum Bank. There's so many different providers that will also let you invest it. And that's another one of those, a lot of my clients, we just, put in some index funds, the stuff that we know we're not going to use for health expenses real soon. And you start to accumulate. A lot of them I've just said, hey, let's leave a couple thousand in cash for if we got to pull it out for health expenses. But the other stuff we're starting to accumulate, let's invest this. And it's really cool to see that piece grow as well.
Yeah. And this is where really talking to your client comes into play, because some clients may have high medical expenses and don't want a high deductible plan because they want the insurance to cover, some of it. So, or most of it. So
sure,
if you have a lot of medical expenses right now, having an HSA may not be the best benefit for you.
Yep.
This is, something for people that are relatively healthy, have a high deductible plan, and they know they're not going to hit that high deductible cap. So you can start putting money away into a high deductible or a health savings account, and then just let it grow. If you're going to be using it every year, it's great because you still get the tax deduction, but then it doesn't have that long-term opportunity of growth and getting tax-free growth.
Yeah, it's not a bad thing if you've got high medical expenses, as long as your deductible is low enough that it's covering it, whatever you put in the HSA. But that is a good point. And I'd be curious your thoughts on this. There's a lot of clients who have said, well, we plan to try to have a baby this year. And I may say, yeah, well, then maybe let's do more of a fully covered, high premium plan this year, just to make sure. And then once the babies are, you're done having kids or whatever, we could look at an HSA plan.
Absolutely. Yeah. I mean, you have to look at it year over year to see if it's still the best benefit for you.
For sure. It's something you're not locked into. You can change every year.
For sure.
So
and then that money's there if you need it, So I had to have a kid that had braces this year, so I used some of my HSA money for braces. I'm not going to pay for that out of pocket, so it's there. It's available. Just write the check for the braces and you're done. It's nice. It's nice to have available.
Yep. This year I wanted to get bicep implants, and so I've got my HSA. So
you could use it. You could use it for almost anything medical nowadays. I mean, it's like Tylenol you can buy with your HSA, but I wouldn't recommend it, but you can.
Yeah. I mean, you get a debit card and you can go do that. So HSA, other topics that you feel like we're coming across that might be people surprised that they didn't know, or they thought it was one way and it turns out it's another way. Any topics you can think of?
I think one of the things that most people are surprised by is that you can do a 401k and an IRA at the same time.
Okay, interesting.
I think there's a common misconception out there that, if you're covered by a 401k, that you can't do an IRA. Well, you can, but it's limited. So there's rules around where there are two different code sections of the IRS, and I hate to get technical, but there's two different code sections in the IRS tax code.
Yep.
One is for IRAs and one is for 401ks. You
Mhm.
can do them both independently, but they both have their own rules and regulations and stipulations on how much you can put in each year.
Right.
So if you're covered by a 401k plan and you're making, more than, I think it's 180 some $1,000 a year, you can't directly do an IRA, but you can always put into a non-deductible IRA and convert that to a Roth, or put it in and leave it in as a non-deductible IRA. There's lots of different options you have there. You can always do both.
Yep. That's awesome. Yeah, that's one of those things that we get a ton of questions about backdoor Roth. And that's one thing we love to talk about. In my mind, it's one of those, and I think, Cory, you and I have had this conversation, like, hey, while it's still legal and out there, let's do it. Not saying it's going to be around forever.
It's one of those things that the backdoor Roth, it utilizes two loopholes in the tax code, where the first one being that there's no income limit on a non-deductible IRA contribution. You can make $10 million a year and still put in $6,500 this year into a traditional IRA, or $7,500 if you're over 50. No matter how much money you can make, you can put it into a non-deductible traditional IRA. Then the second loophole is there's no income limit on converting from traditional IRAs to a Roth. You can make $10 million a year and convert any IRA money you have from a traditional to a Roth. It's a backdoor Roth. It's simple. It's easy. You can put in, $6,500 a year. Yeah. And if you keep doing that every year, for a long time, it builds up.
Yep. One of the things that I have found is people ask, well, what makes a non-deductible IRA? I'm like, well, it's not the IRA, it's the
function of deducting it or not. Right.
Yeah, you're right. So how do I make a non-deductible contribution? You just don't deduct it.
Exactly.
Because people assume just because I put money in an IRA, now it's deductible. No, now it can be deducted, but you determine that when tax time comes.
Exactly. So it's just a traditional IRA, right? So there's really two types of IRAs, traditional and Roth. So if you put money into a traditional IRA and don't deduct it, it's a non-deductible traditional IRA. If you deducted it, then it's a deductible traditional IRA. But you have to keep track on that on a separate form in your tax return. So there's a form 8606 that you keep track of, whether it's, whether you took, if you didn't take the deduction, then you keep track of it there as the deductible or non-deductible traditional IRA contribution. Once you've converted it to a Roth, then you keep track of it as a Roth contribution.
Okay. And so you can have an IRA with some deductible contributions and some non inside the same IRA?
Yes.
Okay.
It gets messy, and I don't recommend it because, you're going to drive your tax person nuts doing that. I like to try and keep it clean, where if you're going to do a non-deductible traditional, either keep it non-deductible or convert it to a Roth.
Gotcha.
And there is one, major stipulation out there that, a lot of people don't know about, is if you have other traditional IRAs, so say you take a 401k and you convert that to an IRA from your old job, now you have an IRA sitting out there. If you put in a non-deductible traditional IRA contribution, you have to they call it aggregation rules. So you have to prorate the traditional non-deductible and the deducted non-deductible, or the deducted IRA in a conversion to the Roth. So try saying that fast. Yeah. It's really the aggregation rules that if you have any other IRAs out there, it makes the backdoor Roth more complicated.
So what can happen? What's the negative if you don't do it right?
You end up having a mix of deductible and non-deductible that you're not taking credit for. So if you don't keep track of the basis, the deductible basis, then you could end up paying tax when you take the money out on stuff that's non-deductible.
That you've already paid taxes on.
That you already paid tax on. Right.
Okay. So it's not a bad idea to do a backdoor Roth if you've got another IRA out there. You just got to be
careful about
either convert it or be very meticulous about the tracking the numbers.
You have to track it really well, or you can convert all of the other traditional IRA out there.
And that's great. That's a good point. That's a lot of recommendations I make. I find that, and this is probably true for you too, there's certain recommendations that is just general, like, hey, at least think about this in your last year of residency. One of which being, when you go into practice, you're got a half year at a resident salary and then a half year at an attending salary, give or take. And if you talked to us anytime during residency, you probably put some money in your 401k or your 403b in your residency, even if it was just a few percent.
Right.
And I often, and again, this is not necessarily financial advice, everybody's situation is different, but I often tell my graduating residents, let's go ahead and convert that. It's $5,000 in your 401k. This is going to be the lowest tax bracket you're going to be in for the rest of your life this year. Let's convert that to a Roth. And then we can start the backdoor Roth free and clear, no other pre-tax money.
That's the best reason to do it, and I always say, look, it's only $5,000 or whatever it is. Yeah. Even if it's $50,000, you can do it $5,000 or $10,000 a year for 5 years. You can do any amount in any year you want. There's always the ability to convert from a traditional to a Roth.
Yes.
So if you have $50,000 and you only want to do $10,000 a year, we'll do it for 5 years in a row, and then you're done.
Yeah.
But converting it to a Roth makes more sense tax-wise over your lifetime, because again, a traditional IRA, if you put money in now, you get a tax deduction now. Great.
Mm-hmm.
You put in $6,000, you get $1,000 off in your taxes. Great. Mm-hmm. You saved $1,000.
Yep.
But when that $6,000 grows to $100,000 when you retire, now in a traditional IRA, when you take that money out, you have to pay tax on every single penny of that $100,000.
Yes.
You've just created $20,000, $30,000 of taxable income.
Yep.
Or tax on that income that you've created.
Yep.
When you convert it to a Roth, you pay the tax now. Okay, great. You pay tax on $6,000. Fine. When it grows to $100,000, you can take it out with no taxes at all. You've just saved tax on $94,000 of income.
That's great. Yeah.
It's an amazing
way to put it.
The Roth IRA and Roth, even 401k, is just an amazing tool for long-term growth and avoiding taxes. Basically getting tax-free growth rather than tax-deferred growth.
Yep.
And a lot of people, and the other misconception out there that I don't even know how it happens is, you get these physicians that are making, 250, 300, 400, 500,000 a year.
Mm-hmm.
And for some reason, they've been told along the way, oh, I make too money to be able to put into my Roth. Yeah. So I'm only putting into my traditional 401k.
Yep.
If your company has a Roth 401k plan, it doesn't matter how much money you can make. You can put money into the Roth 401k plan.
Yep.
And I get that. Oh, I can? Yeah. Put money into your Roth, save you're going to pay tax now. Yes. But that, this year it's 22,500 that you can put into a Roth 401k. Put that in the Roth, let it grow tax free. That way you never have to pay tax on it again.
Yeah, man, there's so many things like that we find that it just brings us back to that point of finding an expert that you like and you trust and has your best interest in mind, because you guys as doctors, so many things about so few areas. And that's true of anybody. We've got specializations. Right. Each one of you has a specialty. Even if that specialty is primary care, you're really good at that. You know a lot about that. And trying to become an expert in something else like personal finance or real estate or any of those things, like, can you do it? Yeah, I'm not going to argue with the white coat investor and say you can't be your own financial advisor, for sure. But it takes a lot of work and a lot of knowledge that a lot of people just don't have the time or the desire to do, or you've got families or you've got just other hobbies or things you want to do, that to come in and say, well, I thought 20 years into your career is your fault. Like, getting misinformation is so much more likely when you're doing your own financial planning on the internet versus finding somebody that knows what they're talking about, that has the experience, that knows your situation. And obviously I'm preaching to the choir. You guys are listening here. And you've heard me say this before, and this, at least if you're listening to this, you found some good information. But taking that time, however long it takes, to find the right person to give you that information and know that this is good information. This person has been doing this a while. They've got the certifications. They've got the knowledge. That thing can save you so much money. Mm-hmm. Like Cory said, 20 years of putting in a traditional 401k versus a Roth, like, you can't fix that. There's no way to go back and make that different.
Nope. That creates a lot of tax down the road. And you have to find somebody that can explain things simply, right? Anybody can complicate the hell out of plans. I mean, there's lots of attorneys and financial advisors and CPAs out there that will, explain things and ridiculous detail and just
Mm-hmm.
so you don't understand it. That means
Yes.
they don't understand it. If they
Yeah.
can't break it down so you can understand it, that means
Yeah.
they don't understand it.
Yeah. That's a very good point. Yeah. And there's certainly a lot of investment strategies and portfolio managers that have talked to me before. And then I try to convey that to a client. I'm just like, okay, I'm going to be honest. They've got a good track record. I don't know why. Maybe we'll stick with just some little more simple strategies that I can
Let's
articulate.
figure out something we can understand and explain well and have good returns.
And it'll probably be just as good and
It'll
probably
be
lower
just as good.
cost. Yeah.
Right. Generally. Yep.
Yeah.
Save some money in the long run.
Yeah. Well, good. So if it had to be one piece of advice that you gave to a resident in their final year, what do you think would be one takeaway that you would want them to know?
I think it kind of reiterates what you were just talking about. Focus on what you do best. You've gone through residency, you've gotten your education. Focus on your career and delegate the rest. Delegate the financial advising, delegate the legal work, delegate, find an attorney that can review your contract when you're signing a contract. Work with a CPA that can help you get your taxes done. Delegate the things that you don't know about because it's not worth the time and effort of you learning. You need to be educated enough to be able and understand enough to be able to ask questions. But delegate the things that you don't want to know how to do. I give the example all the time that my brother showed me how to change the oil in our car when I was 16, he was 18. I did it one time. I will never do it again.
Yeah. That's a great example.
Because it's not something that I want to know how to do. Could I figure it out? Yeah, it'd take me a couple hours. I'd, figure out, may have to go to the store to get more parts and the supplies. And I could get it done, but I still wouldn't know what to do with the oil when I was done. The oil that came out, what do I do with it? I could spend hours doing that, or I could take it and in 10 minutes at the oil change place, pay somebody to do it. Why wouldn't I do that? It's an example of, it's a simple example, but it's an example I use a lot because it's effective. I know what I know because I've been doing it for 25 years.
Mm-hmm.
I'm really good at it. I love what I do, and I love helping people and answering questions. And for me to go out and learn how to remove my daughter's appendix, if she needs that surgery, I'm never going to do it.
Yeah. If we're in a pinch and I had to do it, like, sure. I might have to go to the store and get some other parts and things, but
I'm not going to throw my daughter on the kitchen table and Google how to, take out her appendix. That's just not going to happen.
That's excellent.
We have people who are educated in this country for a reason. Do what you do best and delegate the rest.
Yeah. No, and certainly, people have been screwed over by insurance agents posing as advisors or different, getting bad advice anywhere. But we, that's why we always ask the question, get a referral, find some testimonials. Those are fine. And find out how this person is getting compensated. That can get a piece of it as well, and understand conflicts of interest and all that kind of stuff. So be a savvy researcher as you're looking into this, but and just be smart, understand the recommendations as best you can, ask questions.
Important, right?
Yeah. Work with someone that makes it a collaborative process that has no problem educating you and helping you to understand as much as possible.
Right. And if somebody, any advisor ever says, oh, it's fine, we'll just do it and don't worry about it. No, they need to be able to explain it.
Yeah, exactly. That means there's something they're not telling you, probably.
Right. You got it.
Cool. Well, I think we're at the end of our time today, but man, this has been great, Cory. I think this is a ton of great information that we've never had in a previous episode, and just getting people to get to know you and understanding, seeing behind the curtain of a CPA and how that whole process works. If people want to reach out to you for anything, what's the best way to get a hold of you?
Best way to get a hold of me is my email, cory.lee@ahpplc.com. Not sure if you can post that somewhere, but
we'll put it in the show notes for sure.
Yeah, it's easy enough to get a hold of me by email. I'm always happy to help, answer questions, be a resource. And I always enjoy the time and appreciate you having me on. It's been
Yeah,
great. I always love chatting with you. And
I
whether it's the
know.
dinners or just in person over lunch or, just phone calls, catching up, I think it's always always enjoyable to share information.
Yep. And for the record, full disclosure, Cory does my taxes. So if that tells you anything. Good. Well, guys,
Yep.
thanks so much for joining us for the Financial MD show. This has been another great conversation with some good tips. Hope you're taking notes. We've got links to everything we've talked about in the show notes. Be sure to leave a review because that is key for getting this information into the hands of other young physicians that don't necessarily know what they're doing in their personal finances, but would like to get better. So leave a review, share this with somebody, subscribe, and then join the conversation on our social medias. On the Instagram, we've got TikTok blowing up, Facebook and Twitter. So join us on all those. We'd love to see those get to the point where it's a well-known resource for young physicians to get good, solid financial education. So, and then of course, check out financialmd.com for links to all of this. And if you're in the Detroit area, September 27th, come join us for dinner and love to see you. So we'll talk to you guys soon. This is John from Financial MD. We'll see you next time.